Here's a secret: you don't need 10 indicators or fancy algorithms to trade Forex profitably. If you can master support and resistance, you can spot where the big players, banks and institutions, are likely to buy and sell. In this tutorial, I'll show you the simple way to mark strong levels, how to avoid weak ones, and how to actually trade them with confidence. And at the end, I'll reveal one quick trick that instantly tells me if a level is worth trading, or if I should ignore it completely. Welcome back to BigPips Trading Solutions, where we cut through the noise and give you simple, practical strategies to trade Forex the smart way. This is episode 3 in our Forex educational series. In episode 2, we covered mastering risk management, the foundation every trader needs. If you missed that, go back and watch it, because it connects directly with today's lesson. Now, let's jump into support and resistance, the skill that separates chart readers from real traders. How to identify strong levels. Not all levels are created equal. So how do we find the strong ones? Here are 3 things I look for. 1. Multiple touches. If the price has respected a level 2 to 3 times in the past, it's stronger. 2. Sharp reactions. If the price reversed strongly from a level, that tells us buyers or sellers are active there. 3. Confluence. When support or resistance lines up with another factor, like a trend line, moving average, or Fibonacci level, it becomes even stronger. Example: if EUR/USD bounces 3 times at 1.1000, and that level also lines up with a 61.8% Fibonacci retracement, that's a high probability zone. Avoiding weak levels. Now, let's talk about weak levels. Beginners often mark every small bounce as support or resistance. That clutters the chart and confuses. Here's my filter. If price cuts through a level easily without reaction, I ignore it. If the level has too many tiny wicks and no strong bounce, I ignore it. If the level hasn't been tested in months, I usually wait for fresh confirmation. Pro tip: strong levels are visible on higher time frames like the daily or 4-hour chart. Weak levels usually appear only on the 1-minute or 5-minute chart. Let's look at a live example. On this chart, we see price hitting resistance at 0.6600 on the AUD/USD 1 chart 3 times before dropping. That's a strong resistance level. Later, when price breaks above 0.64000 and retests it, the same area becomes support, and price launches higher. This is the power of S/R flips. It's like supply and demand zones switching roles. Question for you: do you trade better on the 4-hour, daily, or weekly levels? Comment below. I want to know what time frames you trust most. Trading support and resistance. Okay, now how do we actually trade these levels? Here's my simple 3-step plan. 1. Wait for price to reach the level, don't chase, let it come to you. 2. Look for confirmation, a strong candlestick pattern like an engulfing candle, pin bar, or inside bar. 3. Place your stop beyond the level. If you're buying support, put your stop below the level. If you're selling resistance, put your stop above it. And remember, combine this with the risk management rules from episode 2. That's how you turn levels into profit, not losses. Bonus trick. Here's the quick trick I promised: the zoom out test. Zoom out to the daily or weekly chart. If the level stands out clearly, if you can see it without squinting, it's strong. If you have to force it or overthink it, it's probably weak. This one habit has saved me from countless bad trades. So let's recap episode 3. Support equals floor, resistance equals ceiling. Strong levels have multiple touches, sharp reactions, and confluence. Weak levels get cut through easily or have no strong bounce. Trade them with confirmation and stops beyond the zone. And use the zoom out test to filter the best setups. If you got value from this breakdown, hit that like button, subscribe, and comment below what your favorite time frame is for marking support and resistance. And don't miss episode 4, Candlestick Psychology 101, where I'll show you how to read candlestick patterns like a language, so you can spot reversals and continuations with confidence. Thanks for watching BigPips Trading Solutions. Trade smart, stay disciplined, and I'll see you in the next one.